Stopped your car to do this conversation with us. We deeply appreciate it. And it was also
Thank you.
important because we want to try and get a sense from you on what is the mood right now. Is there panic because of these, tariff tornadoes or tariff tsunamis which have come overnight? Or is there a sense that this is more of the same?
So, Tamanna, yeah, I mean, every day there's something new that is coming on account of tariffs, and obviously India is also getting impacted because of that. But somewhere down the line, there is also a realization that, everything said and done, the earnings downgrade cycle is somewhere close to the bottom. That whatever earnings downgrade one was to have seen as far as India is concerned is coming to a close. And you could say that there's also been some compression in P multiples. So from that point of view, if the flows continue to remain what they are, I'm talking about the domestic flows, then it's okay. I don't think there's much to panic. I don't see too much of panic in investors' minds. In fact, people are looking to deploy capital in these declines. I don't see any panic as such.
Manish, that's a strong statement and good to hear that. In fact, day before yesterday, HSBC upgraded India to overweight. And when we spoke to Harold van der Linden, his call was that his Asian clients seem to be believing, and they seem to be telling them that even if the thaw between US and India were not to happen, valuations relative to history are in favor, and 2026 allocations would mean FI flows would return. So if the domestic flows stay strong, and if HSBC's thesis on global flows is correct, are we actually looking at some upsides, and significant ones at that, over the course of the next 6 months?
The harakiri in the market today is the currency. The currency depreciating to 89 and below that. Of course, one could say that Indian currency is somewhat undervalued at these levels. It's not overvalued. At one point in time, it was overvalued. Now, based on the current situation, Indian currency is undervalued. So from that point of view, the negative implication of all the export embargoes and tariffs, etc., is broadly more than priced in the currency. And if the currency is undervalued, you don't have too much of an impact on earnings, or whatever impact on earnings had to happen has already played out. There's still rate cuts that are likely to happen. I think there is a case of a buy only. There is no case of a sell per se. There could be some time correction. The markets may take some time to digest this, but absolute downfalls in the market from these levels, unwarranted according to me.
So what would be the play here, Manish? Let me just get your take on pharma, for example, the latest recipient of attacks. Just thinking back on all the whole host of attacks. There's an H-1B attack, impacts IT. Then there is at one point an auto tariff which impacts auto companies. Now, pharma we thought would be staying away because no country wants to impact something like the price of drugs for its population. But nevertheless, what do you see when it comes to the pharma companies? What's been your assessment?
Yeah, so I think all the four major tariff announcements today does impact India to some extent. Of course, the pharma being the largest component of the tariff, in today's announcement, there's some ambiguity currently whether, the entire value chain is going to get tariffed, or only the final branded formulation is going to get tariffed if it's not made in the US. So this would have implication for the CRDMO, CDMO, CMO companies. If the entire value chain is to be taxed, if the entire CMO, CRDMO facilities are not there in the US, if that is also going to be subject to 100% tax, then there is a wider impact. On the other hand, if the only final branded formulation is to be tariffed, then there's a limited impact. Of course, we also don't know whether specialty or complex generics are to be tariffed or not tariffed. So at this given point in time, I would believe that the large pharma companies, something like, the Sun Pharmas of the world, they have some 15-16% revenues, which are basically likely to get impacted because of these tariffs. Or there could be some branded plays for players like Lupin and, Cipla and Dr. Reddy's. But that's about it on the headline implication, because Section 232 is also implied currently, and biologics, etc., are not falling within today's tariff announcement. It's only the branded portion which is going to get tariffed at 100%. So, we need clarity as to whether the entire API value chain is also going to get tariffed because they go into the branded formulations, or only the final branded formulation is going to get tariffed. So that is one piece. Auto and auto components, heavy trucks, $2.5 billion worth of heavy trucks exported to the US, plus $2 billion worth of auto components. Now they are going to be tariffed at a higher rate. These have some implications. Bathroom vanity fittings, etc. Again, India has some exposure in terms of exports. Some $1-2 billion worth of exports of that component also goes through upholstery, furniture. That is also some. So all in all, you'll have a impact of $5-6 billion on the other components, apart from pharma, which is the biggest piece, $10 billion. Of course, branded is totally out, so we are saved from that front. But generics is totally out, so we are safe from that front. Branded is going to get impacted, yeah. So these would have short-term implications, and one should build in 50% collapse in revenues from what we were getting previously in the short term.
Sorry, 50% collapse in revenues.
That is how you should build in. That is how we should build in our models, right? If let's say 16% of X company's revenues is branded formulations, you assume that 50% of that is not going to come through, and 50% is what you are going to manage with the higher tariffs. So that is how you try to quantify the implications in terms of numbers for some of these companies.
Okay, Manish, what is your sense on what's happening on the positive side, which is demand and domestic demand in India post GST 2.0? We are now, 5 days into Navratras. Are the telltale signs, and I know you do a lot of groundwork, are the telltale signs that the demand has been strong, and is it across categories?
Autos is clearly a flyer. There is no doubt about it. Autos is flying off the shelf. Even anecdotally, previously also, whenever excise duties, when we were in the excise duty regime, they came down. Autos did really well. And I think speaking to retailers, etc., the festive season demand has been a mixed bag across categories, but discretionary somewhat is looking much better than previous Diwali, is what retailers tell us. And consumer durables, automobiles, these are some of the areas where things have started to look up. Not so much in the other category, but yeah, GST positive is basically felt into durables and autos is what we can fathom at this given point in time.
And is it getting restricted to just that, durables and auto, the whole FMCG boost that was expected and the re-rating of your consumer staples? Manish, do you think that that's not really panning out?
So biscuits, etc., the point is that the prices are not coming down, but grammage is going up. So whether that is going to lead to more offtake in terms of the number of packets, etc., not too much of anecdotal evidence out yet, but there is hope that as things stand and as things move forward, this is also going to look up. Plus, we are having some very good monsoons. So FMCG, no direct beneficiary that we have come across at this given point in time. Of course, companies have taken a price cut as per the government's directive, or there has been an increase in grammage. So we'll have to wait and watch and come to specific numbers as things progress in the coming months.
Just one point on IT, and of course Accenture's read-through was looked at very, very closely, some varying views on what it really means for IT stocks. All of them are seeing the hit today. Do you think we're going to see another rough quarter, especially with this overhang of H-1B visas?
Yeah, sentimentally the things are negative for Indian IT per se, and but Accenture numbers were not that bad. Accenture numbers in terms of upping their hiring, etc., is pretty much at par. Only thing is that this H-1B visa is going to raise costs for Indian IT guys. Something to the extent of 2 to 3%. Plus, there is going to be lowering of multiple. Of course, multiples have already got lowered significantly. But on the tailwind side, you have the currency depreciation, so that is going to aid things. But all in all, this 1 lakh for new applications on the visa front, On-site hiring is likely to go up. There is going to be some dent in margins, but I think all in all, there is deep value in Indian IT companies at these prices.
Thank you so much, Manish, for speaking with us and taking out the time to, wherever you were going. You've stopped and done that interview with us. We really deeply appreciate it.
Thank you.
I think very, very, blunt outlook on what it means for pharmaceutical companies. For certain companies, there will be a huge collapse, definitely, of the demand of whatever extent is coming from the US. So you're going to have to look at companies specifically and pick those which do not have that much exposure to the United States right now. Domestic plays is where it's going. Atmanirbhar stocks is what we need to list out as well as we go ahead. Now, let's talk about IPOs, because you've had listings this morning. Telecom Infrastructure Solutions provider Pace Digitech's IPO opens for subscription today. We'll talk about the fresh listings and then their openings as well.